We're now going to work example 4. In this example, we're again asked for income tax payable, and we have employment income, which is other income, of 187,450, bank interest, which is savings, of 15,000, and that will need to be grossed up by 100 over 80 as it's the amount received, and dividend income of 13,500, which will need to be grossed up by 100 over 90. We have PAYE that's been deducted from the employment income. We need to calculate his tax payable. Again, we need all 4 columns because we have all 3 types of income. And this time we don't have any trading income. We're going to start with our employment income, which was 187,450, and that goes in the other income column. We've got savings income of £15,000, which needs to be grossed up by 100 over 80. So the gross amount is 18,750, and that goes in the total and the savings income columns. We've then got dividends. Those were £13,500 and need grossing up by 100 over 90. That gives us £15,000 gross, and that goes in the total and the dividends column. So our total income, which in this question is the same as the net income because there are no reliefs, is 221,200, of which 187,450 is other, 18,750 is savings, and 15,000 is dividends. We then move on to the personal allowance, and again we can see that that will be adjusted as the income exceeds £100,000. In actual fact, it will definitely be adjusted down to nil. This is because the income exceeds the £100,000 limit by far more than twice the personal allowance. A note explaining this will be sufficient. It is not necessary to do a working when clearly the income is so far above the £100,000 limit. So you can just add a note at the bottom stating that as the total income exceeds £100,000 by more than double the personal allowance, it is reduced to nil. So the taxable income is the same as the total income, 221,200, of which 187,450 is other, 18,750 is savings, and 15,000 is dividends. We now need to tax that income. We start with the other income and we start with the basic rate band. The basic rate band is not extended in this question as there is no gross gift aid donations or personal pension contributions, and therefore the normal basic rate band applies. The other income, which is what we're looking at the moment, is in excess of that basic rate band, so we're going to use it up in full on our other income, taxing it at 20%. We then move into the higher rate band. Now the higher rate band goes up to £150,000, and again we can see that the other income exceeds that, and therefore the full higher rate band will be used. The higher rate band is the bit between the bands, so it is £150,000 less the basic rate band, i.e. £118,215. That will be taxed at 40%. We then move on to the additional rate, and we tax what is left of the other income. So 187,450, total other income, we've got 37,450 left to tax. That will be taxed at the additional rate for other income, which is 45%. So that is £16,852. We now need to tax the savings income. Now, I mentioned earlier that you never get to go back to the bottom of the bands again. Because we've reached the additional rate for other income, the savings income will automatically be taxed at the additional rate. So the savings income was 18,750. We tax that at the additional rate for savings, which is also 45%. That is tax then of £8,437. We then tax the dividend income, and again, once you're up there, you stay in the additional rate band. Dividend income was £15,000, and that will be taxed at the additional rate for dividends, which is 37.5%. That gives us an income tax liability on dividend income of 5,625, and we can now see that we have taxed the full £221,200 of income. That was the taxable income that we had in total, so that's the amount we needed to tax. We've done that, and we can add up our income tax liability. That is £84,557. We then need to deduct our tax credits because we've been asked to calculate income tax payable. So we have the tax credit on the dividend income, which is the gross dividend income of £15,000 at 10%, so £1,500. The tax credit on the savings, which is £18,750 at 20%, and that is £3,750. And then the PAYE, given in the question, £65,725. So the income tax payable is £13,582. You can see that this time the tax credits do not cancel out the tax on the savings and dividend income, and that is because they are only at the basic rate. The additional rate has been charged, so there is further tax to pay that again will be taxed through the self-assessment system.